Hi there, this is Rob with another 2-minute overnight overview. Before we got near the close, we were aware of one bearish study that I showed in yesterday's video, so there was some hint that if the odd sheet was weak, it could provide a nice short opportunity. Let's look at the numbers. They weren't weak. They also weren't strong. They were instead all over the place. And looking at ES, we can see the price action suggested a typical up gap percent of 55%. Internals were mixed with a 56% win rate, but a profit factor below 1, and seasonality was weak. This all left the averages about as close to break even as you can get. Trading's like fishing. You need patience. Odds like this really aren't compelling in the least, and normally it's just best to stay out of it. Now let's take a peek and see how it played out last night. After closing at around 1412, ES stair-stepped lower for the next several hours, effectively establishing its range for the night. After a lot of wiggling, at 9:30 it opened down between 4 and 5 points. The market the last couple of weeks has entered a very quiet phase, and that includes the overnight action. So not only have overnight trading opportunities been scarce lately, but the overnight movement has been small, making the opportunity for gain or loss small as well. Rather than showing research today, I want to show a chart that's a standard chart on the Quantifiable Edges charts page. This is a chart of SPY. We see SPY in the top pane. On the second pane are two indicators. In blue, what we see is the size of the average gap on a percent basis over the last 10 days. The line in orange shows the average gap size over the last 100 days. So right now, the average 10-day gap of 0.21% is less than half the 100-day average of 0.45%. This can also be seen in the red line on the bottom of the chart, which simply takes the 10 and divides it by the 100. You'll also note at the end of last year, the 100-day average was about 1%. So gap size the last few weeks is running nearly a fifth of what the average was for the second half of 2011. Average gap size typically goes hand in hand with volatility, and like volatility, it ebbs and flows. With opportunities few and gap size is small, this obviously makes it difficult for me to demonstrate the value of overnight edges service at the moment. But it does help all our new subscribers to practice patience, and in the long run, that's really what's going to be important.